So, baby, we're back. We're back with another freak podcast. Joel, how quick is that week gone, dude?
Ridiculous.
It's gone crazy,
it's
mate.
Ridiculous.
Literally the blink of an eye. It's like non-stop events this
Yeah.
week on the calendar.
Yeah.
Non-stop. What's been the highlight?
Oh, I mean, well, there's three main things that kind of stand out. Well, actually, no, there's four main things. Coronavirus coming out of China, spreading all over the world, spooking markets. ECB was a bit boring.
I thought it was dead. Absolutely
Yeah,
dead.
it was dead, to be fair.
You know,
yeah.
the only... Well, there's nothing really
Yeah,
attractive
true,
about
true.
it, dude. The markets were like flat on that. pretty
True,
much.
true.
What
But
else?
it's ECB and it's always
Yeah, I
important.
guess.
BOC, that move in CAD was so
Yes,
good, wasn't
we'll
it?
get onto that. What else?
We'll get on into that. And then I think UK data as well.
A shift, a bounce, right?
Exactly.
A bounce in UK data.
Exactly.
Yeah, okay. All right, we'll get onto that. Let's first talk about the virus, Wuhan virus, which has seemed to be been found in the city of Wuhan, right? And now it's spreading. It's spreading across the globe. It's in the United Kingdom, dude. Up in Scotland.
Apparently.
Up in Scotland. How is it up there?
I don't know.
So
students, actually, mate. Apparently.
Yes, of
Students
course.
coming back from Wuhan.
Exactly. We've seen Vietnam. We've seen the US, right? US cases rising. Hong Kong, Japan, literally all over the place now, right? And the markets are getting a bit spooked. They're getting a bit spooked because they're trying to compare it, although this is on a completely different scale, but they're trying to compare it to what happened in 2002, 2003 with SARS. Yeah. So seeing a huge amount of volatility across the markets, right?
Yeah, absolutely.
I mean...
Don't really know what else to add to that.
That brain freeze. Sorry, no. So literally, it has been a roller coaster because stocks were rallying. Stocks were quite around all-time highs at the start of the week. Then we were slammed because these cases started rising. We're seeing them globally. Dollar was initially on the back foot, and now anyway, it's been a roller coaster. Dollar's rallying, right? Dollar's been now seeming to be classified as once again as a safe haven.
Yeah,
because
but
it's completely smashing its peers. Look at it.
It's so weird, isn't it? Because it's a safe haven for some things, but not for others. And I think what this week has sort of taught us and what we need to remember going forward is when it comes to this coronavirus, the dollar might act like a safe haven because that's what we've seen pretty much all week, really, hasn't it?
It's true. I'm just trying to think of other cases where we've seen the dollar act like a safe haven. It's just mixed.
US-China trade was one as well. Do you remember?
It was on and off, dude.
Really?
I felt it was on and off. Okay.
Yeah, I suppose.
The reason, why it's probably outperforming, Look at the peers. So you can class dollar peers as more riskier assets, right? You can class GBP as a riskier asset. AUD, NZD, obviously they've been slammed because I say it all the time. Australia, New Zealand, anything positive or negative is affected. Whatever happens in China affects them. So those are really underperforming. We're seeing big flights into yen now towards the end of this week. That kicked off, just so for people because you're going to be watching this a little bit delayed. That big yen flow kicked off on Thursday as we started seeing a rise in global cases.
Yeah.
So what do you think is going to happen moving forward with the markets with this? Tell the people what's happening, dude.
I mean, obviously, as we always say,
view.
neither of us have a crystal ball. But I think this number of cases we're going to see, they're going to keep rising. It's going to spread further and further and further. Do I think it's going to be as bad as the SARS epidemic? I think probably not. Because from what I've seen, the response by the Chinese authorities and global authorities has been swifter. So I think we should be able to get this under control fairly quickly. But in the meantime, the more it spreads, the more markets are going to basically get terrified. You know what I mean? Like when it comes to Europe, which I'm sure it will at some point, that's going to be another time when markets get terrified. Because look, so this is on Friday that we're recording this, right? Just now, we've seen only 3 cases to be confirmed in the US.
That's right.
But the news of those latest 2 have caused a sell-off.
I know, just because they're based in the United States. They don't seem to care about what's going on in China. People dropping literally dead, you know.
yeah, exactly.
No, we shouldn't even laugh, dude.
No, we shouldn't laugh, but that's
dead.
markets,
but then it
innit?
happens, a couple of cases in the US, and then the markets absolutely panic. They shite themselves. One thing I just want to quickly, just before we move on to the next topic, is the fact that the way that, I find it so, it's like almost like a movie, the way they're quarantined. Like Wuhan, the city is being quarantined, and now they're potentially shutting down Beijing. Like, imagine that, you being there and your city is quarantined. Like,
not just that, it's Lunar New Year as well.
Yeah, exactly.
Next
all those
week.
celebrations, I know.
It's like the biggest week in China, and it's going to be quarantined. It's crazy.
All
It's
right.
like quarantining Christmas.
True.
Do you know what
true.
I mean?
All right, on to CAD.
Yes.
CAD, we saw CAD being slammed because I was quite surprised, to be fair, dude. I was quite surprised
Same.
in terms of the tone in which they came out. Like, no one was really expecting that. You know,
Yeah.
obviously we had a bad patch of data for Canada, right? We had that month where retail sales was awful, a bad batch of jobs data, which obviously then bounced the month after. But what was the tone? What was the tone?
Well, the tone in both the statement and the press conference was essentially, we're not cutting today, but if things don't get better, we're going to cut. That was pretty much exactly what Polis said in the press conference. The statement didn't say exactly what they removed the characterization of rates as appropriate at current levels, which basically means rates aren't appropriate at these levels, which means we might have to go lower. It's basically saying
it's dovish. It's CAD negative.
Exactly, all
And
CAD negative.
Dollar CAD did rise to the highest levels, just so you know, rose to the highest levels that we saw since Christmas Eve, since the 24th of December.
Wow.
Big moves there.
Yeah.
And the funny, because we were ranging for a while, for like 12 days, from the 9th up until that breakout there on the 22nd. So it's real range of like literally 30 pips. It's awful trading conditions. And, you know, I thought that could have, I thought we could have been surprised more so in seeing a nice bit of CAD flow than maybe being neutral hawkish, but not the case. Not the case. So CAD being slammed. And CAD, also bear in mind, not really helped by oil market.
No.
Being battered.
Yes.
Absolutely battered. And I mean, look now, I'm just taking a look. Let's have a look at oil market. But the OPEC are now looking to potentially extend the production cuts, right?
Yes,
Less
exactly.
supply in the market, hopefully to try and save oil price. But I don't think they could be saved.
Not this week, I don't think, unfortunately. No. Apparently this has been the worst week for crude since July last year, apparently.
Wow.
So, yeah, exactly.
And what were they saying on the oil market regarding this Chinese situation? Just quickly going back to that.
Oh, so basically, there's a lot less travelling going on in China, right? So this time of year, all over the world, but especially in China, there's a lot of travelling to go home to see your family, all this kind of stuff. So when you quarantine and you stop all those car engines, all those plane engines from running,
bang on,
all this oil stops getting burnt. So it means the demand for oil just plummets. This might be more of a short-term thing, but still, the short-term demand for oil is way down. And you're seeing that reflected in the price at the moment.
Mm-hmm. Indeed. And we actually had, I did post it in a blog earlier in the week, but we had like an ascending trend line, which has been supporting the price. If you look at US oil WTI from the 3rd of October, that was supporting the price right up until the 13th of Jan. Nice breakout. And we had a retest. Look at that. Perfect to the text button.
Yeah.
Big sales.
Yeah.
Big sales coming into play. And literally, we haven't stopped selling. I'm just checking now on a weekly. Mate, we've been falling for 1, 2, 3 weeks. Look at that fall.
Ever since Iran.
Steep. Yeah.
Yes. Literally.
Exactly.
Right at the start of the year.
That was a trigger. Remember I called that top area? Around that $66
there was the,
mark.
evening star that you
That was it. Exactly.
Yeah.
And then the sales have been in place since. All right, what else? What else have we seen this week?
Well, I think
let's talk about the Bank of England. That's been juicy, okay? The data, all right?
Exactly.
Obviously, when we last spoken on the podcast last week, we were talking about, the rate cut being some 70% chance of seeing a rate cut. Well, we've got the interest rates now this week. If you are listening to this now, you've got the interest rates this week. We're expecting a cut because the data was poor. Retail sales was soft. GDP, manufacturing production, inflation was dropping. What have we seen? Why the shift? Why the turnaround?
So now the money market implied probability of a cut is now about 50%, and that's because basically what was the first data that came out? It was jobs data on Tuesday, wasn't it? So we had jobs data on Tuesday, really, really strong. So that was jobs data for the 3 months leading up to November. I think the UK economy added 200,000 jobs.
Nice.
Expectations were for about 100,000, so massive beat. And then this morning we had PMI data. Yes,
services and manufacturing. Now, the services, for those that don't know, make up a chunky 70% of our GDP. So it's a leading industry. That pushed, it's firmly above the 50 mark.
Yeah.
Manufacturing, a decent jump. We're just shy of the growth territory. What was it, like 49.8 or something?
49.8,
Very close to growth. So reassuring, right?
Yeah, reassuring
after that panic. So I don't know. What do you reckon? Are we going to get the cut?
No, I don't think we're going to get the cut personally. I know markets say it's 50-50. But I think most like analysts that I've seen talking on Twitter and stuff have been saying they don't think the cut's going to happen. And basically it's because the PMI data, right, that was for this month, that was for January. And what the market has been expecting and hoping for.
Your laptop's gone off. Have we got a problem here, sir? Are we okay?
I believe not.
We're okay. We're safe. We're safe.
We're safe.
All right, carry on.
Still
recording.
Anyway,
Scared me.
What was I saying? I was talking about PMI data. It was for January, right? What's the importance of January data over December or November data? Well, in the middle of December, we had the general election. So the idea is at the BOE and also amongst the market that everything prior to the general election in the economy was suppressed by uncertainty. And then after Boris Johnson and the Conservatives won, and they're seen as, business friendly and all that kind of stuff, there's this big relief, and we've been expecting this big economic rebound. That's what the Bank of England have been hoping for. And we're starting to see that. PMI data today showed that that's the case. We've had some other data as well, like housing data and a few other less important ones, but still saying the same thing. So, yeah, I think this will be enough to make the Bank of England think, we're just going to wait for now and see how this post-election recovery pans out. We're going to give it a couple more months, and then we'll kind of reassess.
Yeah. Just let me take my take on this quickly.
Yeah.
So, on the chart, obviously, I showed you earlier today how we're sort of in this structure of rallies are being sold at the moment, right? Rally, sell, rally, sell, rally, sell. And look, I told you this one this morning as well. I was calling this we were discussing this yesterday.
Yeah.
And look at those sells coming nicely into play there. Now, for me, in terms of what I'm looking for next week from the Bank of England, as you say, I say same view as you, buddy. Well, I don't think we'll get the cut. It's too early. It's too premature. What I think we'll see, as you said, is that dovish tone. So, and we've seen it time and time again. Well, I have anyway. So what happens? We have that rate decision. We have a knee-jerk spike higher relief because there's still 50% implied chance that we could get a rate cut. Right, so they don't cut rates, markets are relieved. Yes, let's have a spike to the upside of some 50 pips or so for GU, GJ, so on and so forth. And then the dovish tone sets into people's heads and they're like, okay, right, let's start pricing in. The Bank of England could start cutting potentially March, April, whenever sales come into play. So knee-jerk spike higher, sales, I think is quite a logical sort of view.
Yeah, I agree. And just one other thing to add to that is I think the fact that we might still have a no-deal Brexit, essentially, at the end of the year, that is going to, in my opinion, mean that this economic rebound post the general election isn't actually quite as good as what we hoped for, because there's still uncertainty. Not as much as there was before the election.
Could I just quickly say something? Sorry.
Yeah.
With the uncertainty, it infuriated me this week, okay? No, even last week, and it carried on into this week, because you mentioned his freaking name again, Javid.
Yeah, I knew.
This guy is a moron, dude. Like, because I was having a conversation, as I said, with a guy in the gym, right? And this guy's an accountant. He looks after, companies' exposures, and they were getting a little bit nervous because this jackass, I have to say, he's a jackass, said, get used to it, get used to not having a relationship with the EU, your EU partners. How can you just casually say that? These businesses are heavily reliant on these relationships. I know. And this jerk, they just think it's a game, dude.
Yeah. Well, that's politics. I mean,
I know.
It's classic. It's classic.
Yeah, so obviously if that happens, as you say, that risk's still there, we're in trouble. GP's in trouble. And, that could potentially carry... Those rallies that we're seeing now, as I say, that theme that we're observing could continue to be the case in terms of them being sold. I'm just going to quickly bring up the calendar here because I know we're just munching on with the time. Go on, Joel. You did the weekly, but what are we cracking on with this week, dude? Let's have a quick skim over. What are we looking at, baby?
I mean, obviously we've got Fed next week as well. The thing is, Fed is not the most exciting. It's a bit like the ECB. It's probably going to be a bit more exciting than the ECB.
Bro, it's just wait and see right now.
Exactly.
It's just wait and see.
Exactly.
I mean, we could get some juicy bits there. What else we got? We've got Australian CPI, Bank of England, obviously big one. Got US GDP, advanced reading, decent.
Yes.
CAD GDP, Chinese manufacturing, dude. It's a juicy week, baby. It's a juicy week. That's pretty much it from my side. Anything else?
Yeah, that's pretty much everything from me.
Baby. I hope you all enjoyed that. Don't forget to check out freaknetwork.io. Look, all of these themes that we're talking about in terms of how to implement those into your trading, complement those with the technicals. Baby, we does this every day. We live and breathe that. Check out freaknetwork.io. Other than that, let's get it.